Hi, this is Dave with Market Trading Concepts. It is Friday, February the 24th. I'm doing this after the market close on Friday instead of waiting for Saturday. While it's fresh in my mind, I'm a little bit busy this weekend, so I thought I'd bang this video out sooner and get right into it. So first, taking a look at the Dow, we had kind of a mixed day in the Dow. We had a kind of a doji day, really. It was pretty quiet, boring action, and we closed with a doji on the day. We did test around 13,024 on the Dow futures, so that was pretty interesting. We hit that $13,000 target. So I think we are going higher in the Dow, potentially, I'll try and talk for real here, potentially 13.5, 14,000. It's hard to say. We had some pretty negative kind of close in the middle of the range or in the lower end of the range at the end of the day today. So it's really hard to say where we're going to go from here. But as long as we hold this 12,800 level, I'm still pretty much bullish on the stock indexes, particularly on the Dow. And again, like, what would change my mind is if we start getting closes below this 21 period moving average or below this 12,000. And but what I mean by that is decisive closes below that 12,800 level. So I think that's a good level to stay long above. Could we get another pullback from this level? Sure. That might actually even be a buying opportunity. I'm still looking at that level. And I think we're just going to make a slow grind higher at some point. It's pretty slow action though. It's a little bit boring, and there's some more interesting trades out there at this point in time. So I'm just going to take a quick look at the sister indexes just to see what's transpiring here throughout the week. I think you basically got a similar situation as in the Dow. You still have higher targets in play. Nothing's really changed here. You had a slow grind higher throughout the week. Let's look at the Nasdaq here. Yeah, same situation. Actually, you haven't had a pullback to the 21 period EMA on the Nasdaq in quite a while, so a decent pullback to the 21 period EMA, which now today sits at 2,537-ish on the Nasdaq. That would be a good entry for a potential long. You should at least get a decent bounce of half of the range if that were to happen. For a good overnight trade or a good even a good day trade. So that's an interesting trade. I'm going to try and keep my eye on that. What I mean by try is I missed a lot of trades this week. A lot of the stuff that I talked about in last week's video shaped up. They panned out. Valid signals took place, but I was really focused on picking up the pennies from day trading that I kind of missed the big picture in the swing trading. In the swing trading opportunity. So I need to kind of be a little bit more focused on the actual day trades that are setting up, or the swing trades rather, and and try to balance my day trading with my swing trading so that when the opportunities come up, I don't miss them, trying to pick up the pennies in day trading. Because swing trading, offers typically less stress, not necessarily less risk, but less stress and higher rewards. So it's important, not to lose focus on where some of those opportunities can be. Okay, so one chink in the armor of the stock index futures, or one potential heads up to watch, is in the if you watch the transports on the daily chart. We had on the daily chart of the transports, we had a recent short breakout fire. So here's the daily chart. You had a break of this level, and it didn't quite hit a one-to-one target, but you definitely had some downside, and you've had an 8-period moving average cross below the 21 period moving average. which is a sign of weakness. And then, sometimes this is a valid setup for some people where you'll get, a bounce back up to this level and then it'll roll over. So not saying that that will happen, but this is a potential red flag. This is coming close to the zero line. This is rolled over. So there's some potential, weakness coming into play, or that did come into play. The question is it going to, hold these levels? Is it going to hold these levels and roll higher? If you look on the weekly chart, you have a trend line coming into play, support here at the trend line, and also, you can see that it closed off of those lows. On this candle, it closed off those lows, not quite 50% off the lows, but it closed off of those lows. And you can see, you've got this trend line, and you've got this 21 period exponential moving average coming into play on the weekly chart. So that is a support area. Like if you look at this level here, you had a nice bounce. We could potentially have a nice bounce, but this is an area to watch. It's just a potential red flag. If you see it holding this area nicely and moving higher, chances are the stock indexes are going to move nicely higher as well if it holds this level. So just taking a quick look at Apple, it seems like Apple, it had this sell-off from last week. We talked about, that blow-off top and, it being in a doji and people not necessarily wanting to let go, at the bottom of this weekly candle, and it seems like they're just pushing it right back up towards the highs. This is just really surprising, crazy strong action. I don't really have any comment. It looks like it wants to go higher. You have potential price resistance at least at the highs, which is only a couple of dollars away. I really wouldn't know what to do with that. I definitely wouldn't want to be long, when you have all this air between its current price action and the 21 period moving average on the daily and the weekly. I would be comfortable though if it kind of flushed out back to this 486 level getting long, or even anywhere where it would touch the 21 period moving average in the future, at least for a first bounce, because you've had so many days where it's been above the 21 period moving average. So that's something interesting to watch. I really don't know what to say. It's just crazy strong, and it's really interesting to see how that happened. People obviously took profits here, and it's just being bought right back up. So that's really interesting. Okay, so I wanted to take a quick look at the U.S. dollar here, and the U.S. dollar is kind of on the weekly chart. It's chewing its way through support, and it's kind of broken initial support and closed, close to the bottom of its range here. This caused some, upward movement in some of the commodities that we were talking about last week. Gold, the euro especially had quite a reaction. So if you look at this on the daily chart, you have if I could just find it here, you have a situation where from a Darvas squeeze perspective, you've got a squeeze, and it's in a potential breakout situation. It really looks like it wants to go lower. Now we talked about it potentially testing, maybe this trend line, and at some point. So I think that's probably in the cards at this point. It's easier to actually see it in the euro. I'll just flip over to that chart in a second, but before I do, I just wanted to look at this. Now, I'm not sure why this didn't print a Darvas squeeze short on the chart. It looks like the criteria was met for a Darvas squeeze short on the daily chart. So there's there's potential weakness here. You've got red Hakanashis on the daily. You're in a squeeze. This is about to roll to the low side. It's above the zero line on the MACD, and this is rolled over and it's negative. So this color should actually be red. Just to kind of denote, the weakness in this chart. But from the weekly perspective, it's still kind of, hanging on to support. It's still intact. It wouldn't be unusual for a move down to, this kind of quasi trend line, this sloppy trend line here, that would line up with these price lows in this bigger uptrend. It's really hard to trade this because look at these swings. I mean, these are pretty crazy swings. Let's take a look at the euro chart and see if we can get a clear indication of where things are going. So taking a look at the euro then, which is the inverse, basically moves inverse to US dollar, you can see clearer indications on direction. You see here, and this is something that I was potentially looking at and I missed. We talked about it last week. We talked about not having any real clear indication of where this was going, and we had a trend line. I believe we had a trend line drawn here. We broke this trend line above this Darvis box. We don't have any fresh signals here except for a MACD and some blue Hakanashis. But on the daily chart, it's a little bit more clear. You have this, you have a higher high in place and a higher low in place, giving it that energy to break up to the upside. And you have a long signal on the Darvis squeeze firing on the daily chart at 133.26, I believe it is. And you've got all indications of bullishness here once it broke out long at this level. So I think it's pretty clear now that the euro is going to move higher and the dollar is probably going to move a little bit lower. Initial targets on the euro we have at 136.78 potentially. I think I would want to look for a little bit more strength here and to buy probably the first pullback to this 21 EMA on the daily chart. This is kind of how I use this work in terms of the Darvis squeeze is a breakout momentum strategy, and I also use it in conjunction with reversion to the mean strategy. So sometimes I'll look for just a breakout and a go with, or other times what I'll look at is the breakout and the pullback. So both are valid depending on the instrument you're looking at. Some strategies are more effective than others, and it just really depends on the instrument and your kind of experience in watching how the instrument behaves and how the instrument moves. Like for example on gold, if I had this situation, it's usually a go with, and then we'll jump into that in a few charts and we'll have a look at that. So just taking a look at the Australian dollar now. I'm still long the Australian dollar. It's really the only long swing trade position I have, and of course it's the least responsive. I knew that we had resistance here that I've been talking about at 107.91. The weekly chart still looks strong, although we've got a loss of momentum here on this week. We're still holding above the breakout point from the weekly Darvis squeeze perspective. We have a higher low in place. We have everything intact for a move higher. It's just having a tough time pushing through this resistance, and I think we're going to see much higher levels. The problem is, like for example, with options, I think I have the March options, so they expire in about a month's time. So when you get a pullback, I bought this pullback here on this day, and you're up, you're down, you're up, you're down. When you get into these consolidation periods, I think I'm flat on my position right now, and I'm okay with that because I'm looking at potentially higher move. But if this thing doesn't get off of its butt, it's the erosion is just going to kill the value of the option. And even if the trade ends up working out, I could still end up taking a potential loss on the position because of the time erosion in the option. Just the way that the options are priced and, closer to the expiration, they just lose value. So I'm hoping this thing will kind of hurry up and get moving so that I can take some profits here. I think now, we have a situation where we're in a weekly, a daily squeeze, and this is rolled to the downside. I'm looking for this to roll back up higher. We're losing momentum here, but we're still bullish. So what I'd be looking at is, a situation where it fired an actual short signal against the trend, so I would ignore that. I would consider that a failed signal, which in itself may be a sign of strength. But I'm looking for it to, break these highs and just push through. So I'm looking for an actual fresh Darvas squeeze on the daily chart to confirm the direction. Now, you could have potentially been spooked out of this trade when we came down here and printed this signal. But we didn't actually, even though we probed below the 21 period moving average, we didn't actually close below it. So because we didn't close below it and we didn't get even close to a solid close or two solid closes below it, not even one solid close, I didn't get spooked out of the trade. Had we had like one or two solid closes below this, I would have had to cut my position and reevaluate and expect maybe a deeper pullback to this level. So we didn't get that. Hopefully we won't, and we'll just monitor this position, and hopefully in the next week or two it'll just kind of bust through and we'll get some quick action and take some profits on this trade. Okay, taking a look at the British pound, we have a situation here where we are in a squeeze with a potential breakout, and it seems to be the theme. A lot of the currencies are, now that the US dollar is showing signs of weakness, they're really shaping up for some movement. So we talked about the British pound, I believe it was last week, breaking through this level, showing signs of bullishness, and you can see, it broke up above this level, it came down, kind of tested the trend line, and you can see this pretty major accumulation bar on the weekly chart, on the weekly basis, closing way off the lows, right close to the highs. This looks really positive. I may have to look at a swing trade position in the British pound next week if I can stay focused and not concentrate too much on day trading, but actually look for good opportunities in the swing trades as well. So you have this situation where you have a higher low in place, which is good. You've got a lot of room up to this level here. This is your initial. This break of the trend line is your initial heads up that we are getting some strength in the market. In this market, blue Hakanashis look good. Long squeeze, a sloppy long squeeze, losing momentum, looks good. This looks great, and you just need to see this situation come into play. From the daily basis, you could look at an entry point with a long Darvas squeeze here on the daily, which you could possibly see within a week or two's time. You need this to roll higher and crossover, roll higher. This is losing momentum but looking good. I think we're going to see upward prices in this. You've got kind of a double bottom in place. You do have a higher low in place. You haven't violated this higher low. It's holding. So it'll be interesting to see. You've got accumulation on the weekly. You've got these things coming into play. Will be interesting to see if the British pound decides to move higher. Canadian dollar looks primed for a move higher. It actually printed a long signal, a long Darvas squeeze signal on the weekly chart. You're actually back into a potential breakout signal because this is real time. This radar screen indicator is real time. So the price action basically probed above the breakout point, and then it probed above enough to print a signal on the chart with this indicator, and then it pulled back. So you've got initial signs that it wants to move higher. You have a situation on the daily chart where you're pretty much consolidated, but you printed a long signal as well. So I think the safest thing to do would be to either look at maybe taking a trade with a fairly reasonable stop below this Darvas box, which kind of lines up with this 21 period EMA, or waiting until you get some more bullish indications, because you have potential room to move up to these levels. You don't need to be the pioneer. You don't need to get any arrows in your back on this kind of a trade. You could wait until the situation becomes a little bit more bullish, and then you could look for maybe the first pullback, or just wait for more signs of strength. It looks good. Looks like it wants to go higher. The real question is, where do you pull the trigger? Where do you enter the trade? Another thing to note is the Canadian dollar can be a little bit of a slow mover. So it's not necessarily the best momentum type of vehicle or instrument to trade and look for quick profits. Okay, so here's the real heartbreaker. We were looking at gold last week, and we said, there's no clear indication. We had this consolidation period, leave it alone kind of thing, and then we said, or I said rather, what I'd be looking for is to see, some squeeze action come into play here, and then a potential break of this level to move higher. Well, we did get this, and this is a situation where, if you're not really focused on a day-to-day basis on on the markets, and I do have alerts set up, but sometimes I ignore them because I'm really more focused on day trading at times. So this was a situation where we had the right idea, but we just we dropped the ball basically. No big deal. It happens. There's always opportunities in the market. However, this played out nicely. If you look at this, you had this level at 1737-ish, and you had a Darvas squeeze fire right around that level. It's kind of hard to read it. I think it's 1738 or 39 that it printed at on the chart. And it went from that level up to 1790-ish. So that's a good 50 points of upside. That would have been a really nice trade. Now, what you also have coming into play is on the weekly chart. We said that we have a potential signal on the weekly chart and a 30-point gap between the signal on the daily and the signal on the weekly. So the interesting thing is, and I think this is all inspired by some downward movement in the U.S. dollar. Usually, gold is seen as a bit of a currency in terms of in risky environments. People like to buy gold when fiat currencies are going down. You get, especially the U.S. dollar, you get things like gold priced in U.S. dollars going higher, from an inflationary type of aspect. It takes more dollars to buy gold kind of thing. If you listen to guys like Peter Schiff, they explain that really well. But if you look at this, basically, from a non-fundamental perspective, you've got a long Darvas squeeze around this 1767 level. You do have some, price resistance in the background, but I'm going to be looking, if I can stay focused here, I'd like a nice rapid pullback to this 21 period moving average to get long. That's really the safe entry. But, there's been many situations in gold where on a weekly basis, as soon as it breaks this weekly Darvas squeeze, I just get in. Because you've got so much potential for upside. You have a potential target just to test these highs at 1950 and, potential target of $2,000 an ounce. So, if you're going from let's say 1770-ish, let's call it 1770 just for easy math, and you're going all the way up to 2,000, and this is normal for a weekly Darvas squeeze on gold. You've got a couple of hundred points of upside, $230 per ounce of upside. So, sometimes you just go with it. My experience on the last couple of Darvas squeezes of gold have been like this. They've been very positive, where you can see, if I can just zoom out here, and you look at some of these signals, you've just got, this was a good example going back. I apologize, it's a little bit sloppy, but you can see gold is kind of a momentum market. When it gets going, it really gets going. So you have this situation here where you got a long signal here at 1286, and you hit your target up here of 13. I can't even read it. It's a little bit sloppy, and I apologize. But you've got a couple of hundred points of upside here. Here you had a long, you ignore the short because it's against the trend here. But once you got a long signal, you get a long signal at 1447, and it went up, at least $100 an ounce according to, the indicator, and then it even went higher. So these are pretty powerful signals, and sometimes when you wait for the pullback in these momentum kind of markets, you really miss the bigger opportunity. You know, even if you take a little bit of heat on it, they're pretty high probability, and you just have to manage your risk. You know, like in this situation, you probably would have had here a pullback opportunity before it pushed higher and hit the target. But sometimes, you know, if you don't get in, it just keeps going higher and higher and higher on you. You don't get a very valid or decent pullback. So I'm going to have to evaluate that next week and really see what it all means in terms of, you know, just getting into the position and potentially, you know, just, you know, establishing my risk and just going with it. Now, it seems like if gold is going higher and it's signaling that it's going higher, you know, some of the powers that be are maybe looking for a riskier environment, a riskier financial environment, or it could just be a situation where, you know, cyclical money flow. It's really hard to say. I really don't try and think too much about it. I'm just kind of following the signals and seeing what, you know, these bigger time frames are telling me, because they're usually pretty powerful signals. Like in this situation here, you know, this is a failed signal, which in itself, you know, kind of led to a pretty powerful signal in itself, but it was against the trend, so I wouldn't have been interested in it. But I do look at these signals as failed signals, and, you know, looking for, you know, here I was looking for shorts to kind of get their heads ripped off, and that's exactly what happened. So now it looks like we're kind of primed to go higher. So it'll be interesting to see if we can get an entry next week at a decent level. We're a little bit extended, but, you know, we might just kind of buy it high and hope it goes higher. Sometimes you need to do that. We'll reevaluate and see what we can do next week on it. So a quick look at silver. Silver's kind of in the same situation. You know, you have now I wouldn't trade silver futures with anybody. You know, my worst enemy's money. But, you know, you could kind of look at this as the same play using, you know, the SLV ETF. So this is an interesting. This is a potentially interesting trade. The only difference is, like, you have a break of this trend line. You have a long signal. You know, the same kind of sloppy long signal here, blue Hakanashis, MACD rolling higher. You have the beginnings of a, you know, a cyclical turn in this indicator here, you know, from negative back to positive, and this is blue. You have a, you know, kind of confluence in the daily chart where you have, you know, another signal. So this is poised for a move to retest these highs here, which line up nicely with this target of 41.53 per ounce on silver. So this is really interesting as well. The only thing you don't really have is a higher low in place. So I don't really like that, but it's you know, it's not the end of the world. You might have a situation where it just takes off momentum style, or it could, you know, do one of these where it pulls back, puts in a higher low, and then goes. So it's really just a risk management issue trying to time it. I think the safe entry would be, you know, getting a pullback to the 21 EMA on the daily chart if you can get it. Sometimes, like I mentioned about gold, if you get these kind of momentum, this is a momentum setup, and if you get a momentum setup in a momentum market, you know, sometimes you'll just miss it, and the last thing you really want to do is chase it and then, you know, catch it at the high and have to sit through a pullback, and that high potentially could be, you know, and often is, when you grab the high, it ends up being the interim high, and it doesn't go above that, so it doesn't really give you an opportunity to get out even at scratch, or even, you know, especially with a profit. So you got to be really careful in timing these entries. I like this action here, you know, so I think the next pullback would be the safe entry. So I'll be keeping an eye on that as well, if I can stay focused on my swing trading and see what happens. I'm more apt to trade gold because I watch gold a lot more than I do silver. But I just look to see if silver is silver's kind of like the sister indexes. You know, when you look at the Dow futures, you want to look at the Nasdaq and the S&P. Well, when you look at gold, you kind of want to look at silver and see what it's doing as well. So wow, even copper is following suit, and copper is usually a something that, you know, maybe economists and people watch to see if, you know, there's copper's used in a lot of products like automotive, construction of houses, in a lot of different industries. So it's just interesting to watch. Copper actually looks a lot like gold does, where you have a kind of double bottom in place. You don't make you've got this double bottom where the low is, it's pretty close to this low. So you're not making a lower low or much of a lower low, and you don't really have necessarily a higher low in place, but you're not actually going lower. And then you've got this, this break of the trend line down, this break of the downtrend line, and then you've got a little bit of consolidation. It comes up, kind of, revisits it, and then looks to go higher. And you've got a long signal here on the weekly and a long signal on the daily. You're bullish, 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 bullish. You're just full of bull. And, you're full of bull on all cylinders, and it looks like it wants to go higher. Now, I personally don't trade the copper futures, but I do look at it from time to time just to see, what's going on with it and what that might tell me about, the bigger picture on metals and the bigger picture in the potentially in the economy. Now, here's one market that I really wanted to look at, and I guess I'll probably save it for not last, but one of the last. Son of a gun, oil just took off. Like, what a crazy move. You had this, we talked about this last week, where you had this long signal and it would hit probably this target here around close to 106 a barrel. And man, like, it's at $110 a barrel almost. This is just crazy. You had bullish indications on the weekly chart, but you didn't have like a Darvis squeeze setup necessarily. You did have like a Darvis box signal, but not a Darvis squeeze signal. So looking at this, the daily chart and everything else, it looks like gold really wants to go higher. You've got a lot of bullish signals going on here. I really don't know where it's going to go. I guess the only thing you could really look at is, some levels of price resistance. I think it'll probably test, well, it's already tested 110. It might go to, just shy of 115 or even right to 115. Where it's going to go from there, nobody really knows. But wow, what a market! I missed this trade. I was looking at it in last week's video. Again, it's a matter of staying focused, and I won't beat that. I won't beat myself up over it, but I was looking at this Darvis squeeze reversal with this potential target. I didn't actually get in. I was kind of alerted to it on in the first couple of days that it broke out, and I just didn't react to it. I didn't do anything about it, and it was a missed opportunity. It happens. Hopefully, it's something that I can personally learn from and say, okay, look, when this happens, just kind of stay focused, weigh the odds, and just decide if I want to take a position in it. I was interested in it, but I just thought maybe we would have a chance to get at least a pullback, but that didn't even happen. Like, you just had this crazy momentum situation, and that's why sometimes when I see a Darvis squeeze or a Darvis reversal take place, sometimes I just jump into it. In this situation I didn't, because the safer entry is always the pullback. The safer entry is always the pullback. So we didn't get that. I didn't trade it. I took my eye off the ball. It happens. Live and learn. And lastly, I'd like to take a look at the grains. Apparently, it is impossible for me to do a video under 20 minutes or even under 30 minutes. So I'm going to have to work on that, and I apologize for the length of these videos. This is something that really, personally, it helps me. Even if nobody is watching these videos, it kind of helps me to focus and tighten up my weekly plan for next week, or at least the things I want to look at, and kind of review all the markets. So worst case scenario, it it does me some good. So just taking a look at the DBC, we were talking about this last week. We didn't really get a pullback. We had this long signal here. I was bullish on it. And we were looking at it going higher. We didn't really get a decent pullback. You know what I mean? We didn't really get any decent pullback here. Everything's intact. Everything is bullish. On the weekly chart, it fired a long Darvis squeeze reversal here, Darvis squeeze signal, and like if you look at this action here, you know, it just kind of broke out. You don't have any pullbacks. You know, you got a long signal at 28.59 here. You had a long signal somewhere in here around 28ish. So, you know, you had some confluence between these two time frames, and that's usually, I usually like to see that. If you get, you know, let's say this fires and then this one fires 1 and 2, it's usually pretty, you know, pretty powerful. So you have a potential target here of, you know, I'd get in front of it probably around $32. You do have some resistance in here, you know, just over $30, 30 and a half, somewhere in there, price resistance. But I think we're probably going to make our way up to $32. This is another trade that I didn't get in. If we get, you know, if we just got one day where we had a healthy pullback, I'd get all over it. But, you know, I'd jump all over it. But we're just not getting that. And I'm not sure what's driving this. I'm mostly a technical trader. I don't read any grain reports or anything like that. I'm just looking at my signals and saying, you know, this looks really healthy. You know, we talked about this, you know, higher low being put in place, and then this signal, which is usually pretty bullish. We have a good trend on the daily chart. So if we look at, you know, some of the other grains, if we look at some of the grains and see what's driving this, last week we said it's probably, you know, the soybean market that was showing the most signs of strength and probably driving this market. And, you know, you have good signals on the daily chart, you know, with targets on beans of around 13, 12, 75. So you're at 12. I think you closed with a doji on the day. You're above the 8-period moving average, above the 21-period moving average. You closed around 1278 and 4/8, so 1278-ish. And, you know, you have potential targets much higher. So I think a good pullback, you know, is in order. It may not happen. You have bullish indications across the board. You have, you don't have a Darvis squeeze situation, and this looks like it's going to turn higher. This looks good. You know, you're losing momentum on the downside. This looks good. So, you know, the weekly chart is really pretty sloppy. You got kind of a sloppy higher low in place. You don't have a momentum breakout situation in terms of, you know, the Darvis squeeze, but you do have a Darvis box long. It looks good. I mean, no question about it. It looks like it wants to go higher. So if we look at, for example, that was soybeans. Let's look at wheat. You've got a lot of potential breakouts on different time frames here. Let's see here. You have this long Darvis squeeze that printed on the chart, so it must have popped up and pulled back. You know, you have a break. You have a potential trend line here. Let's see. Just line it up here, and let's turn this red. Okay, so you have a good potential Darvis squeeze reversal here. You probed above the Darvis box. It looks like you have higher low in place. So what you really want to see is follow through above this level, above 671-ish. It looks like you had a pretty healthy pullback. This is a breakout at 671. You had a pullback to 639-ish or lower, but you look like you have a little bit of accumulation coming into play. On the daily chart is really sloppy. Honestly, I don't know what to do with that. I'd probably wait for this to go, you know, a situation like we talked about with gold, where this goes into a squeeze, breaks the top of this Darvis box, these go blue, this rolls to the high side, and, you know, this is just starting to turn blue, you know, and then you see these tails here. You've got potential accumulation coming in here. So, you know, this one closed more than 50% off its lows. This looks interesting. I think it may go higher. You know, the weekly chart is indicating it wants to go higher. This is a red flag. This is good. You know, you've got a kind of mixed action here. So this is what I would consider, you know, heads up, early stage kind of action. I'm just going to jump back to soybeans for a second and just point something out. This is something that I notice quite a bit. When you have a situation where, let's say, you had, you had like a pretty valid short signal here. Let me just change this to red. So you had a pretty valid short signal here where you had, a Darvis squeeze situation printed on the chart. Once it reaches its target, you can see here, it kind of held support, it kind of held support here, and then now it's pushing higher. So it's kind of like all the energy to the downside has been exhausted. You've hit your targets. I usually like to see this, to see that, something is kind of bottomed out. Or not that I like to see it, but I usually I take note of that, to see if if this reached maybe half of the Darvis box, there's a potential maybe it's going to roll over again. But it looks like all of the selling pressure has kind of exhausted itself in this market, and things are ready to kind of move higher now. So that is one, another positive for soybeans. And now finally let's look at corn. Corn is kind of interesting, where you have this looks like it's ready to roll back to the high side. Potentially you've got bullish signals here, indications. This fired a sloppy long, kind of like some of the other markets we've been looking at. And this looks like it wants to roll higher to the upside. So, from a cyclical standpoint, you could get a situation like this. And then if you look at, this situation, you have a sloppy higher, not a sloppy, but a higher low in place. You don't have a higher high in place yet. But if you do get a higher high in place, it's going to trigger a Darvis squeeze setup. So this is interesting. This is something that you want to kind of see a little bit of confluence between these markets. On the daily chart, you have higher low in place from this position at least, and then you have this was, I guess this fired a signal because this box hadn't formed yet and it was looking back at that box. That's why you have this signal printed on the chart. It's actually a signal from this box, and then it hit its target. So this is not in play anymore, this short signal, but you do have bullish indications coming in here. Blue Hakanashis, you have squeeze, potential rollover to the high side, and this is positive, although it's close to its zero line. So this is a situation where you could get a Darvis squeeze long firing within, days. So this is something to watch. If you get a break of this level at 648-ish, and then you've got the weekly chart at 672-ish. I mean, these are huge moves in the grains. Those are massive moves in the grains futures markets. But looking at it from a big picture perspective, if you get a long signal on the weekly chart, you're going to get potential movement up to here, which is another massive move. So it's something to keep an eye on. We noticed this situation last week, and I think what we're looking at here is we have indications the grains want to go higher, and we have some long signals. I think the DBC is a good heads up, and as we discussed, I think the beans are basically kind of leading the way. So this will be interesting to see how this unfolds, and see if there's a way that maybe we can trade it conservatively using maybe the DBC ETF if we get a decent pullback. So this will be something I'll keep my eye on. And then last but certainly not least, we have an upcoming meetup this Sunday. I can't even remember the date, the 26th. Excuse me, this Sunday the 26th, we have a meetup this weekend. We have about 10 people registered so far. We'll probably have closer to 10 to 15 people attending, and we're going to talk about different investment ideas and potential opportunities in the market. We'll probably be talking about the financial markets, which is something we focus on, but a number of members in the group have expressed interest in also in different types of investments like businesses, real estate. A number of us are interested in real estate, so it'll be an open forum discussion. Every meeting has a different focus. This meeting will focus on different investment ideas, different trading ideas, basically any idea that the members have that they want to discuss in terms of the merits of it, making money, investing in different vehicles. So it'll be an interesting meeting. We have some interesting people coming to the meeting with various backgrounds. Some are actually real estate agents, some are traders, some are investment professionals, portfolio managers. We have a number of people that are that will be attending the meeting. It should be a really interesting discussion. Looking forward to seeing you guys out there. Looking forward to the discussion. Hopefully, picking up some ideas, sharing some ideas. We'll have coffee. We'll have some drinks. We'll have some things to eat here at the Market Trading Concepts trading floor. Office facility. So it should be a really good meeting, and I'm looking forward to it. Looking forward to seeing everybody there. If you're not part of the meetup and you're interested in attending future meetups or this meetup, all you need to do is follow this link here. Go to this link and then just if you're not logged in, I'll just show you quickly. If you're actually logged out, then what you can do is, let me just find this quickly. So if you're not logged in, what you can do is you can click on the Join Us link, and it will it'll take you through different opt-ins so that you can join the group and you can participate in the upcoming meetings. I guess we've had 4 meetups so far since I took over as organizer of the group back in December of 2011, which was only a couple of months ago. But we were committed to having monthly meetings every month, every Sunday, last Sunday of the month. Hopefully without fail. We want to keep this going. We want to keep it rolling to keep the interest going. A lot of meetups there's a lot of interesting meetups out there. But I think a lot of the organizers of meetups, I don't want to say fail, but I think they don't realize that the consistency of the meetings, in order to keep the interest high, in order to keep the progression of the group going, there has to be a level of consistency, and this is something that we're really focused on going forward, making sure we have the meetings every month, and sometimes we'll be having 2 meetings a month. When other things come up. So it'll be a great meeting. I'm looking forward to seeing you all there. We're approaching 48 minutes in this video. Again, I apologize for the length of it, but I hope that some of the ideas and some of the analysis helps you in your decision making. We're not necessarily providing advice, but we're providing you a look into some of the concepts and ideas that we use to analyze and kind of strip away, not necessarily the enigma of the markets, but some of the indications that might tell you something's going higher, going lower, where a good entry point may be. So we're not providing advice, but we hope that the concepts and ideas are of interest and that you can utilize them in your strategies. Again, look forward to seeing you hopefully at the Burlington Investment ID and Active Traders Meetup this Sunday or in subsequent meetings. And have a great weekend.